What's good, YouTube? I hope you're doing well. It's jacobcrypobury here. If you're new to the channel, make sure you do subscribe. Today we're going to explore Chainlink because we're pumping at the moment. We're up 8.71% on the day, or just refreshed to 8.13%. But either way, things are looking pretty good. And I think I know why we're getting this juicy pump on this daily time frame right now. And that is because you may already be familiar, but they're finally unveiled their roadmap for staking, where you can earn up to 5% Chainlink. And let's have a little look at what they've just released on their blog as of June 7, 2022. So it's still pretty fresh news. If you're reading this now, you are one of the very few that probably know about this. So Chainlink staking, exploring the long-term goals, roadmap, and initial implementation. The long-term goals of Chainlink staking. So why is this valuable? Why, as a potential holder or investor, should this mean something to you? Well, Chainlink staking is being built around 4 long-term goals. These goals serve as the guiding principles behind its development, and it will be the pillars upon which to define its success over time as the staking system matures. Increase the crypto economic security and user assurance of Chainlink services. So this is the first sort of benefit. So we're looking at long-term solutions. The primary goal of Chainlink staking is to increase both the crypto economic security and user assurances of Chainlink Oracle services. Staking introduces another powerful incentive and penalty mechanism for Chainlink nodes to consistently generate accurate Oracle reports and deliver them to specific destinations in a timely manner. It's also extremely good for the holders who want to get passive rewards over a long period of time, and it helps keep total value locked and liquidity locked into the ecosystem as well. Number 2, enable community participation in the Chainlink network. So another key goal of staking is empowering a greater number of community members to directly participate in Chainlink network by enabling them to stake their Link tokens to support the performance of Oracle networks. Importantly, stakers can raise alerts if they believe an Oracle service has not met predefined performance standards, with the opportunity to earn reward for timely and valid alerts. Third point over here is generate sustainable rewards from real long-term use. So we can see highlighted below, native token emissions from the Link token supply will be used to create an initial base level of rewards for stakers, with the goal of tapering off over time as other sources of rewards grow and begin to be directed to stakers. The other bullet point here, user service fees from sponsors of Chainlink Oracle services, with a portion directed to the stakers. The more users pay for Chainlink Oracle services, therefore the greater the amount of fees that can become available to reward stakers who help secure the services. Fourth point over here is empower node operators to access higher value jobs by staking. Quite technical, so we won't read into this bit here, but really ultimately we want to look at the staking rewards. Probably what you all guys are excited about. So in V0.1, it's expected that the native token emissions directed to stakers will target a base level of annualized staking rewards up to 5%. So this is pretty nice APY, to be fair, for a blue chip project like this. And I think it does provide great incentive and increase the investment appetite to potential new holders, as well as the existing holders that will probably be adding to their bag upon this good news. So the conclusion right here, the introduction of staking is a pivotal moment that marks the evolution of Chainlink Economics 2.0, a new era in Chainlink's long-term security and network economics. So really good to see. Bullish news right here, guys. Keep an eye on Chainlink because it is going to be one that grows over the next few years. Absolutely. As we see, all of these accumulation phases do take a good 800 to 900 days before we see the next crypto bull market. So I wouldn't be surprised if we actually have to wait until at least late 2024 until we start seeing all that euphoria all over again, because we know that the bull market ended in 2021. About April, that's where we saw the bearish divergences on the larger time frames. So we're going to do a bit of price analysis as well for Chainlink. What's going on at the moment is I've highlighted where we've had the oversold positions in the vertical blue lines. You can see we just reached oversold again with the Terra Luna crash, and anyone that did buy into that Terra Luna crash is already up 65% on their investment. So again, it's just a load of FUD washing people out their cryptocurrency. Same old noobs getting washed out, retaliating upon fear. logic getting invalidated once again. So what I'm seeing happen here on this particular daily time frame is we've actually put through some nice higher lows, and we've come back up to the previous swing high. We got rejected just at this $9.30 level, which is pretty much expected. The RSI is slowly coming back. Now, one thing I do notice with the RSI with Chainlink, every time we do come to about 70, where these red lines are, we do see distribution following this, and we're getting quite close to that sort of area of particular distribution. What we could do, just to look at the trend lines here, is just gauge where that could be, because we're already getting quite close when you look at these diagonal resistances. So maybe this is the local top for Chainlink for now, but we could still see more continuation depending on how far this news gets pushed. But you see here, this $9.34 level rejected at that resistance right there, which is quite an important integral level of resistance where we didn't really want to lose that support. So at the moment we're trading in this little range between basically $8.77 and $9.40. Looking at the RSI, we do have a slight bearish divergence playing out where the RSI become lower and the price structure actually increase. So we put a high on the price, lower high on the relative strength index, and in turn this can be quite a bearish reversal indicator. So do look out for that in case we do see the bearish momentum coming. Big sell-off wick here. That $9.39 level is proving to be quite tricky. Looking at the 20-day moving average over here, where did you go? Okay, so I don't have that anymore for some reason. We'll ignore that for now. But basically the Fibonacci retracement is telling us 0.382 is where we could effectively come down to around that $9 price level. But what I want to look at more importantly is what the price of Chainlink could be in the next few years. So really the way we're looking at this is a big supply phase. If we look at the macro scale and look at the Fibonacci extension, where was March 2020? Right over here. So this was the COVID-19 crash. We've actually corrected now all the way down below our 0.786 fib level of basically $12.54, meaning we're back into those potential undervaluation zones. So yes, we could still move lower. Bitcoin can still come down to 200-week moving average. And if that happened, we'd probably see a $5 Chainlink all over again. But I really don't think we'll be moving down below those $5 levels, because this is a key area of consolidation right here. We're going to put a rectangle actually, because if Chainlink does come back down to these prices around here, it's looking extremely good for reaccumulation. But we're yet to see a $2 and even $4 Chainlink yet. I doubt that's going to happen, and I don't think that would be the case. So let's remove some of these lines for now. What could effectively happen for Chainlink over the next few years? Well, what I speculate will happen is if we take the swing high of the all-time high of $52 and all the way down to this local low, which we could assume is the market cycle bottom, we'd effectively be looking at price ranges of $65 to $82, and at current price levels you're looking at around a 650% increase to the upside, depending on the traction and the amount of hype we see for this project. How many legacy holders hold their positions, don't actually sell off their positions due to impatience as well, is also another important thing. But you can see so far it's just constantly putting through higher lows as well. So really the trend is down. The natural feeling is to be bearish right now, unless we can break out to the upside and get a bullish reversal. I don't see a $15 Chainlink just yet, but I do see it happening over the next few years. If we look at the BLX chart here, it's going to tell us roughly how long we need to wait in order to see the next particular bull market, because every time we see the green line form on this chart, this is how long it's taking to see the peak of the next market cycle. This is 793 days over here. Over here we saw roughly 853 days. So we're looking at roughly 750 to 900 days would be the assumption, which takes us to around this time here. So if this is the bottom, we'll be expecting a long accumulation range in these levels through June 2023 before we actually start coming up higher and maybe seeing $100,000 plus Bitcoin as well. So what else can we explore today? Well, we got the crypto bubbles. We can have a look at the market capital on the weekly time frame. We can see Ethereum is down 0.4%, Bitcoin is up 1.9%, just holding that $30,000 level and the $1,800 level for Ethereum as well. Fear and greed index at the moment is sitting at 11, so still extreme fear lingers in the market. We're not really seeing any neutral feelings. The sentiment is bearish, and with bear markets means you're selling the resistances, you're putting through constant lower highs. things aren't going to get good quickly, and that's just the truth, because there's too many macroeconomical factors putting too much pressure, supplying and suppressing the movement of cryptocurrency. And what the whales want is everyone to be terrified, because if everyone is terrified, the whales can actually scoop this up and basically take the risks to hold for years and years to come. We can see Rainbow Chart as well is also sitting on basically green and blue, which is another buy zone against the logarithmic regression band. So personally, I think crypto right now is a good entry for new investors. If you did buy at the top, then you've got no choice but to either dollar cost average or wait a few years, and it's effectively your fault for jumping in and chasing it on the greed. I bought most of my cryptocurrency when the COVID-19 crash occurred, meaning I bought in at a fantastic time where everyone was terrified, and I was the contrarian. I did the opposite to what everyone else did. So I was very lucky with what I did, and my entry was really, really good. So now I'm waiting for the same thing to happen, and we haven't quite got there yet. When we do get there, I'm going to share it with you guys, and I'll also be going all in on Bitcoin. I don't care about normal money right now if I know that Bitcoin is down back to these fair values, because we were truly overextended, and there's not really any favors buying Bitcoin at the top. If social media is completely swarming you with euphoria, nostalgia, and news about how everyone is getting rich, means you've already got into the project too late. When social media is not talking about crypto anymore, you've just got to use analytics such as Google Trends. If we look at crypto, for example, if I just type in cryptocurrency here, we're going to see, if we click on the 5 years, let's go worldwide. For example, the trends tells us everything. Bull market over here, bull market over here. As soon as you see the trends come down, that tells you that crypto is pretty much in a slump. It's in a lull. It's not going anywhere anytime soon. And sometimes the macro data is what matters most. Anyway, guys, I hope you enjoyed this pragmatic anti-sensationalist video. If you like, do subscribe to the video. Subscribe, like, comment. I think I said that twice. And make sure you hop into the Discord channels, because I will be sticking around through the bear markets to help you surf through the tumultuous waves of crypto. Appreciate the viewing, and take care. Bye now, guys.